Hello, 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 and welcome to a very festive show. Yes, it's time for, of course, the stock market Monday open, and we are just 1 week away from Christmas now, guys. Of course, we've seen the rally that knows no bounds in terms of it's not even a rally, it's a parabolic Christmas festival. And we're going to be talking about whether this market could actually even have a turn in it into the festive new year. And obviously, I want to wish each and every one of you a very Merry Christmas. And if you celebrate it, obviously have a great time with your family and friends. For everybody that's in the Northern Hemisphere, enjoy the actual white Christmas, while for the Australians and people in the Southern Hemisphere, will be basking in sunlight in the summer. I actually want to have a white Christmas one day. I'll have to come over to the US again and definitely experience that, maybe some New York or something. Anyway, I hope everyone had a good weekend and you're ready to get into some market action. We'll be going through stocks, commodities, and cryptos as per usual. We'll talk about quite a few things, including some of the big macro that we started to see play out and whether we could see a pull back into it. Just a quick reminder, we have our free weekly VIP newsletter. This week's isn't out yet. I must admit I was a little sick on the weekend, so just in the recovery now, but I will fix that for tomorrow. And sign up so you'll get a copy of that one. And just remember as well, public service announcements. Yes, we do have a Discord and targeted individual. I like how he's got his name, targeted individual. For your information, a fake Tom is trying to sell me a bot trading system on Discord. Yes, unfortunately, there are a few of them. If you are a Discord master, I've already put on 2FA. I've put on everything you can think of to try to protect everyone. But unfortunately, the sneaky DMs, if it isn't me officially, and firstly, I'm not selling robots anyway, but if it isn't me officially, then just check it out. Make sure you do your diligence when you see the random message saying, hello, would you like to get involved in a crypto scam? Yeah, I don't talk crypto like that. We talk Bitcoin, Ethereum. That's about it. So if they're talking about other coins, believe me, it ain't me. White Christmas means something else where I am from, says Torpy. Okay, very good. Jesus, Torpy. Okay. All right, let's get into the stuff here for US 500. Please make sure to smash that like button as well if you enjoy the show. All right, let's get started. So US 500, I think we're all pretty clear that we have a very aggressive market here. And this market's not just a little bit aggressive, it's super aggressive. So let's talk about these rally points because, of course, we have a doji, we have another doji, and we have a high point that hasn't been taken this week. Now, what do dojis tell us? Well, they tell us that effectively we're in a equilibrium point or a range-bound market. And at this stage, of course, the trend has just been continuously up. So it's too early to say that US 500 has even decided to go down. The DAX, on the other hand, is a little bit weaker, which we spoke about in our weekend and previous video. And so far, that's been coming to some fruition, the weakness in the DAX. So what we're looking for here is this week in terms of options, I'll just tell you where the general walls are. We've got kind of like a lot of strength between 4,700 for expiration and 4,800. Now, keep in your diary that it's not this week's expiration, but the week after this week, coming into the end of the year, end of the calendar year, that we actually have more options. And I mean quite a lot of them. So it's like a secondary OPEX to a more minimal gain. So we do sometimes see, due to the illiquidity around that time, some shenanigans. So let's go smaller time frame here because I know a lot of us want to talk about US 500. I still kind of maintain it's better to, we don't need this watch reaction here anymore. I just left it there for purpose. So what I maintain is probably still better to rotate more than anything else. Of course, Russell 2000 is the kind of premier at this stage. Now, it doesn't mean go buy the Russell. It's the idea of mid caps and small caps that are quality picking back up and obviously pulling through. And that's been true so far. We do have a little bit of weakness here from the perspective of we haven't made a new high. But we don't have a new low. So let's mark out some of the points that I would have on my charts. Number one, I would have out 46.94. You can see that this candle here, while it may look like there's a lot of volume there, it's probably unlikely to have much volume. So some areas to watch if we do end up going lower this week underneath 46.94. Next stop on the train, probably about 46.50. And this actually is unlikely to get bought up too much if we do fall through this zone. So I could see it doing like this as a possibility, and then maybe buy off that point. Now, the other thing that's also possible is we just drain higher. If we do 4,800, I think could be a eke point for the end of the week. So I think that it's very unlikely we're going to get through 4,800 as well, but never say never. That's the way the market kind of plays. That's just taking into consideration options, than everything else that we've had so far. Let's go Nasdaq for a second here. Now, Nasdaq is at our highs. So you can see here that we have previous all-time highs. I don't see why the market won't want to go for it. The problem with the US 500 is that it hasn't slowed down. Also, it's not really at a res. So until it hits 47, whatever I had on it, 47.76 or something, or 4800, really it's not at any resistance. So although the Nasdaq's coming into a resistance point, there's still some room for it to go up. So I think that the S&P is generally the best guide, and that's another one of the problems here. All right. What else? Remember, put in your questions if you do have questions and ask anything, so we can answer that throughout. USDL is sold to Nippon 14.9 billion at $55 a share. Thank you, Tex. Appreciate that. And the ES printed an inside bar day on Friday. Thoughts on that? Yeah. So we'll have a look at the SPX in a moment. So I'm going to usually what I would do is I'd look at the SPX for that type of thing. And I would say this is a fairly rare kind of, not an extremely rare, but it usually does mean a coil for another big move. Now, one of the things that I guess we're seeing here at the top so far is that we do have some outstandingly large days, but traditionally markets that are going to explode, like that have gone parabolic, they usually like a big wick. So you can see over here, even very similar period, we had like big rally, the doji, we fell off, then we had this huge wick kind of candle that came off the top. Generally speaking, when you go to these extremes, you are looking for those kind of extreme moves followed by either a huge sell or you're looking for those big wicks. Now, you don't get them as much on the S&P, but if you go through some of the stocks, you'll know what I mean. Like they're the stocks that have gone ballistic in the last couple of years. So that would be one of the things that I'm looking at. What about yields? We'll go through that in a moment. Let's go US 2000 here for a second. So again, US 2000 watch reaction zone here. This is if you are a dirty bear, I mean, it's the dirty bear zone. You can see the Qs. You can see the Russell 2000. You can see the DAX, which we'll look at in a moment. All are weakening. DAX hit 17K. Obviously, it's almost down 400 points since then. That's the German market, but it's another long leg doji. So I can see why you might be, tempted, but it's just a tempting like level. So basically, people will have been burnt. I like to think of it as you find a zone, which this is a zone. These are okay to have, let's say pot shots at, but really the problem with it is you have to use some kind of option, or you have to be realistic and say that you're only going to win them around 50% of the time, if that, even at the key zones. And therefore, you need to make your profits make enough sense to make a 50-50 coin flip system worthwhile. And 50% wins is not necessarily a loss. You just have to make your profits better than the losses by a substantial amount. Let's have a look at the German market, the DAX. So you can see here the German market has significantly weakened. Now, this has actually shown some structural change. And if it does make a new low, I think that's a relatively big deal. So what we'll do is we'll set a little alert here just to see whether the DAX can weaken off. With the Russell, I've put here a little green box. I think until the Russell gets underneath 1953, which I'll set an alert for, I'm not really too concerned about the Russell turning over. I feel like it's still relatively strong. And do remember, if we go macro, which we'll do right now, there are still signs of strength for the Russell, which I put into the daily show. So actually, look, you can just watch all our daily YouTube videos. Watch the one I put out in the weekend. I've covered it all there, so we can do that and go through it. Samuel says here, how will the dollar index move when the Fed is cutting rates, but recession occurs plus stock market goes down? Will the dollar index go up or down? Well, you have to ask yourself the question, Samuel. There's usually two main drivers for the US dollar. So this is the question. Here we go. I'll give it to you guys. It's a good one. So there are two main drivers for the US dollar, or the dollar index. Is one of the drivers obviously interest rates. So if you think about it, is if interest rates are getting cut down heavily, is it more desirable to own US dollars than other currencies? So here's the thing. US goes into recession. Has the rest of the world gone into recession and requiring heaps of rate cuts as well? Because remember, it's not just the rate cuts that matter. It's in comparison to other currencies. So many people don't consider, well, it's all about, this currency has a higher interest rate than this currency, which is more desirable to be in. Now, of course, there are other complexities to it, but ultimately, that's one of the big things. One of the reasons I said the Australian dollar was going to be stronger than the US dollar moving forward was because we're stuffed in Australia. We have stickier inflation and we have to hold rates at a higher point for longer because of our housing problems. Now, at the same time, the US has had to push really hard and damage the economy. And obviously, they're looking at doing more rate cuts. So if the US is going to put in 6 rate cuts and the Australian dollar is only going to put in 2 rate cuts, which one would you like to own over like next 12 months? You can see that differential starts to play out. So that's the first question. It's all in comparison to other currencies and whichever currency you're looking at. So do I think the US dollar will weaken? Yes. Yes, I do. Because I do think that we're going into, most likely based on bonds, some form of recession. Now, remember, soft landing narrative is very popular right now. Because it's popular usually means it's not going to happen. But we also know that we shouldn't be concerned about it just yet. Now, I'm not saying it's super hard landing either. I don't really know how it'll play. We don't know that, but we'll come play with it when it does occur, and we talk about some strategies with that. It's about the strategies, knowing what to do with the right times. So the next thing with the dollar index is going to be, if it is weakening because of yields, what about safe haven demand? What about the complexities of what's going on in the world? What about the W word that we can't mention because we're probably demonetized the channel here. So all of those things. What about those things? Because then we do have safe haven demand as well for the US dollar. Now, I don't think that necessarily safe haven demand is going to save it from this particular cycle. So in my opinion, it would be US dollar to weaken over the next 12 months if you had to guess. Okay. Now, if the stock market goes down, will the US dollar go up? Temporarily, sure. But usually the go-to if the stock market's going down for recession fears would be something like treasuries, because they are the perfect counter. What's occurring effectively is treasuries do well if yields are going down. US dollar does poorly if yields are going down. See how there's like a way there? So actually treasuries, that's what the market's prepping for. Ackman was well ahead. I feel like we were well ahead as well with our call that maybe the market is at least going to start assuming that the rate cut's coming sooner than later. And that's moved into a very nice treasuries move. Let's talk yields in just a second. Does that make sense? Samuel's question is quite a good one there. Daily Reddit Horror says, are you bullish on China as a whole? I think that everybody's been so wrong on China for so many years now. There's a funny quote by Heisenberg, I think he put out, and it's, credit to him. It was pretty funny. So it was like 2019, China's cheap. 2020, China's cheap. 2021, China's cheap. 2022, China's cheap. 2023, China's cheap. 2024, China's cheap. I'm telling you guys, it is right this time. So that's basically 4 years of saying China's stock market is cheap. And you've had a lot of people coming out and doing that. It's not just been, our Dalio's been really in it and getting smoked, and a lot of people have been. I still don't know why anyone's trading Barber, by the way. Barber is a big mistake, but big mistake company. That one's a poster child for, saying, don't go against the grain, guys. Like, I don't think Barber is the greatest in the Chinese market. But look, Moody's downgraded it. And that's usually a good sign, because when people downgrade stuff and everybody hates it, remember, there are those old sayings, when everybody hates something, you should start to love it. Now, that's not to say that it's not without its problems, but I would say that when I look at the chart like this, I'm not terrified of it. Now, you might be, but I'm not. I actually quite like some of the structuring over on the right-hand side. I've talked about the downward trend coming out. I've also talked about K-Web a few times over here. Now, I think the key is when you're thinking about overseas, and a lot of you guys probably like, what the hell, stop talking about this. Let me know, chat. Do you hate it when I go on my rambling about things that are maybe a little bit less popular? Because this isn't exactly the most popular kind of stock market in the world right now. I think that when you think about this and you think logically, people thought it was cheap here. People think it's cheap. It's all cheap. But it really is actually like cheap for the middle class, because you got to remember the rise of the middle class is coming. Now, you don't have to own residential property REIT crap or banks, but when you think of like the US, when you think of Australia, when you think of the UK, when you think of a lot of these Western countries, the rise of the middle class was a big deal, and it meant that we had things like supermarkets. Think of Costco. How many of you shop at Costco? How many of you shop at Costco? Costco's here in Australia. It's dominating. I go into Costco And everyone's getting fat because we're all eating those damn $1 hot dogs with the soda. And that's what's happening. I mean, I went in there the other day. I was trying to drink the soda water, but it's always broken. They're trying to make you drink the Pepsi or whatever they've got there. So, Costco is kicking some ass. But when you go to a lot of these Asian countries, they don't have those supermarket infrastructures. They're coming in now, but the rise of the middle class is actually a very interesting concept. So I don't care even if it's insulated. I still think that they are relatively cheap. Now, the problem is timing is everything. So you could say this. I'm not going to come out and say, oh, I said this yesterday. No, I said it back in September. So, you can hold me accountable to that. In September, here's today. So how's it going? 0%. So remember, it's not a trade. I said that many times. Trades and investments are very different. Trades, you want to have instantaneous or pretty instantaneous profits and returns and things like that. Investments can take a while to play out. It's like a penny stock right now. But there you go. I've heard you say you're afraid of big real estate problems, and I understand correctly that's what China has. Different thing. So yeah, target individual. You'll have to do my advanced masterclass. You know what? I keep that one behind the paywall a little bit there. Targeted. There is a reason, and you might say, well, that's mean, Tom, but I put a lot of work on figuring out that type of stuff. So yes, I will tell you that I am terrified of residential property, but it is a specific time, a specific place, and it's not Chinese residential property I'm terrified of. Let's just say that. Samuel Chia says, thanks, Tom. Brilliant explanation. It's only part of the story, but you've got to ask yourself questions. See, a lot of people, and again, if you let me know, chat, do you like the rants? Make sure you give it a thumbs up if you do like this type of stuff. So a lot of people, they are on Twitter or X, and they're on YouTube, and they're on TikTok, and they're on these things, and we're inundated with information. The difference that ultimately is going to make you profitable or not, this really smart big brain guy told me this, that manages a lot. Well, he's not manager of money. He technically is employed by really rich guys to make, decisions for them in terms of, based on like his analysis, his top level thinking. But what he does is he says, does that give me edge? I share a lot of stuff on the channel. Of course, we bring stats in all the time. Sometimes you'll see a stat will sit there for a while because I'll be like, it's pretty interesting. Because I think that stat's actually going to give some type of edge. Now, it's your job as a trader or an investor to figure out which types of information actually give you advantages. Now, you're probably working out because you're here on this channel and you're big brain already. You've been doing this for a while. Most people that come to our channel, let's ask actually in the chat, how many of you, I'm going to do a poll here. I'm interested because I haven't done this in a while. Let's do a quick poll here. All right, here we go. We're going to ask this question. All right. All right, here we go, guys. Let's ask this question. So, how many of you have actually been trading for a long, long time? Now, it's probably clear that most of us, and there's nothing wrong with this, most of us came in somewhere around 2019, 2020, 21, 22 that are here. Now, there will be a lot of members because I know our community does tend to have some more old school players out there that will be GFC, like me. Like I'm global financial crisis person, and I liked markets before that, but let's be real. Global financial crisis brought me in big time. It was like that. It was a crash addiction. And then when it came through, I just remember Apple being pre-split like $88 or something. I was like, oh my goodness, it's so cheap. Even that would be equivalent to probably like 3Gs right now or something. But yeah, anyway, what I'm getting at here is it's up to you to figure out what information matters and not. So you'll notice that when we talk about news, generally speaking, there'll be news announcements and I don't really even care. And now you might say, well, why don't you care? You a stupid imbecile. I'm going to tell you right now, how can I possibly beat the algorithms at making the instantaneous decision? If anyone's ever seen a Bloomberg terminal, what you're going to notice is that the market comes in with news and it is like a Christmas tree in itself. It just goes boom. And there's just everywhere. It's just crazy. It's like, whoa, I can't see. And the reason that happens is because there is just so much information being printed and the market's going to go wild and move. But actually, you often get the best trade well, after you see the trap, which is why we call it patience, react, don't predict. And we put that in our day trading masterclass stuff, because that's where you're going to have your edge. But the point is there's a narrative, and that narrative is not going to give you any edge. So let's go back to oil. This whole horrible situation's happening. Obviously, everyone said, oh, oil's going to go up. Oil is going to go up. What happened to oil, everybody? What happened to oil price? So anyway, yes, this is a very interesting zone, by the way. And one thing you could do is you could put like a fixed range volume profile through the whole thing. And what you'll notice is there's a lot of trade in here. So it's not just stupid of me to say this, but this is an area that clearly someone wants to buy. Otherwise, it wouldn't be getting supported. So someone's buying and someone's obviously selling, but it is being supported very heavily. And it's not a joke. It's a big level. All right, Donkin Dave. Good to have you here, Donkin Dave. Because you've been here for, geez, a long time, Donkin Dave. I can tell you this. Big Nick NRG says, been since 2015, but it has become so much easier and cheaper to trade thanks to all the new brokers. Totally agree, Big Nick. When I first got in and you were trading currencies, pound odd, 35 pips. Now, if anyone knows currency, 35 pips. When I first got into stock, we were probably sitting about 0.35%. Now you're talking a matter of basis points, 0.001 or 3, yeah? Or 3 or whatever. I remember people telling me then, oh, I used to pay 1.5%. I said, how'd you trade? They said, oh, the moves were bigger. I was like, man, you must have been some delusional trade investors or something. That's 1.5%. How do you make money on that? That's just crazy. Now, that was really bad. That was some bad spreads back then when you used to call them up. Only a little while working 24 to 25. What's this? Hopping in 100% now, Anthony. Well, congratulations. Hopefully that does well. Michael M says 2019, I started investigating trading and luckily discovered FX Evolution. Awesome, man. What do you reckon, Tom? Is Grinch coming to Nasdaq and S&P? Oh, it's a good question. I feel like it is because the FOMO is so real, but that's just a feeling, and a feeling means nothing. And that's the problem. You need the weight of evidence. So if I was to say what's the weakest market, I'd say it's the DAX because the DAX has actually shown some technical shorting here. Let's go over to this survey here for a second and see what you guys have voted on. So turns out that 1 to 3 years, which I would expect is the main one. So we got the votes in. Here we go. We've got a couple of votes there. Well, let's have a look at the split. Where's the result? The result is gone, guys. Damon says, Tom, bro, I never asked you this, but how long did it take you to become profitable? For quite a few years, bro. It depends, though. Different strategies, different types of profits. So first up, my trade vesting account. Okay, look, I'll be real. It went through the exact thing that you always go through. Started off, I buy some Apple. Started off, I'll buy some high-quality Australian stocks. Woo, making some money. Oh, what are these things called mid caps? Oh, they move more than the small caps. I mean, the large caps. I could make more money here. Get involved. Okay, it's going all right. It's going all right. Trade vesting, of course. Crappy trade vesting. Then I found out about, the small caps. Oh, yeah, baby. 100% moves in a day. Sounds good to me. Yeah, well, that wasn't good, was it? That went pretty shitty. And I learned a valuable lesson. I don't like things that are under $5 billion. Okay. And that means it's trash and I don't feel like trading it. But anyway, it took quite a few years. FX is definitely the hardest trade. I'll be real. I think FX is very difficult, which is basically currencies. And then the easiest is obviously stocks. And if you had to rank them, I would say the easiest investment / if you want to even flip tool has to be, actually, I'm going to ask the chat. What do you think the easiest asset class in the world is? Easiest asset class in the world. It's filled with stupid people. It is filled with stupid people. It is easy. It's not what you think. Let's find out. Anyway, let's read the chat here. So we got, how long have you been trading for? 1 to 3 years, 41%. 7 plus, 25%. Damn, that's high. Wow. Didn't expect that. I would say almost no channels on YouTube have 7 plus as 25%. Proud of you guys. That's pretty amazing. 3 to 7, 19. So we have traded most of our traders and investors. You guys are in for the long haul. That's pretty amazing. It's an amazing community we got here. And under 1 year, 13%. Congratulations as well. Surprising you guys are finding us actually under 1 yearers. Must have been doing some good clickbait because I don't know how that came through. But anyway, I appreciate you watching because yeah, usually we're reserved to what I would have expected, which is 3 years, 3 to 7s, more so than anything else. All right, so here come the question. Here come the answers to that question. Someone says here, yeah. So Damon, what it is, the biggest changer, man, is to come from. I would be real. Number one, you got to come from abundance. Now, everybody says this type of word. It sounds like you're some kind of cult leader or something when you hear the word abundance. Sounds like that Secret book. Anyone remember The Secret? Oh, I wished it, so now it's mine. No, that's not how it works. The abundance principle is just to get yourself off the FOMO. You've got to realize there are many markets and many opportunities, and generally in any one day, you might have opportunities on 20 to 30 pairs across thousands that you have edge on. Sometimes there are more, sometimes there are less. But you don't have to trade every day. And once you start to come to that idea, remember patience, react, don't predict. A lot of this is actually about abundance mindset. That's going to be a big game changer. Obviously, risk management. And in my privates, what I do is I talk about this principle. Oops, I'm going to have to get rid of the timer. 1 second here. Okay, so I talk about this principle. So if you have like a napkin, this really smart guy told me this, and he said, Tom, here's the most important aspect of trading. And this was a long time ago, maybe 2009 or 10. This guy managed a lot of money. And he said to me, he goes, what do you think the most important thing is? And I said, trade plan. And he goes, all right, I'll put trade plan in here. Okay. Because I said system, yeah. And then I said, what's the second most important thing? I said, risk management. He said, all right, put that here. And I said, all right. He goes, what do you think the most important thing is then? And I said, winning. And he said, no, it's going to be psychology. So you're your own worst enemy most of the time, especially when it comes to leverage. You ever wondered why there are places that offer you 1,000 to 1 leverage? Because they know you can't control yourself with it. They know you can't. You cannot control yourself with 1,000 to 1 leverage. There's no way you can control yourself. If you can, you're a legend, better than me. I can't control myself with that. So actually downing off leverage was a big thing as well. And realizing that you shouldn't use much leverage. And I tend to use relatively low amounts, which is also quite helpful. Okay, let's have a look here. You were an instant expert. We all become instant experts. I remember my first time watching Bloomberg television after trading currency. This guy comes on and he's like, the QE is going to do this or something. I don't know, or something like that. And I said, this guy is an idiot. How is he on television? He's a moron. He's an idiot. I mean, he's talking about a totally different investment philosophy, a totally different trading style, all these things. But I was quick to judge him. Don't worry about that. I was like, yeah, he's a moron. But anyway, he wasn't clearly. Well, I don't know. Actually, he might have been. But the point is that you can't judge on that because you don't know. There are different systems. So if I was to say the easiest trade in the world, okay, and you might say, well, Tom, it's not a trade. It's going to be, let's see who got it right. IWM calls were fire. Congratulations. I think a few of us did pretty well recently. A few people did pretty well. This person's going crazy. Congratulations, but I hope you have the balance to back it up. Now, if you don't have the balance to back it up, let's say you made 30K on $250,000. I want you to have a Christmas miracle, okay? And this Christmas miracle is going to be this. You're not allowed to trade this week. You're going to keep that money, you're going to withdraw that money, and then you're going to go back to trading 1% to 2%. Maximum per trade. Thank you very much. And congratulations. There you go. I actually gave you a Christmas present if you didn't know just then. But well done. Very good. Nat Gas is ready to launch. This person's mad. Why bring up natural gas? Let's have a look at natural gas. I haven't even answered the question yet, but I have to look. I don't know why. Who the hell is telling everybody to go on natural gas? Because every week so far, everyone's been like, you got to get on natural gas, man. Look, it doesn't look too bad. I'll be real. It doesn't look as bad as it did. But just remember to own the contracts is very, 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 very nasty. So to me, it would be oil over gas at this point. I prefer the oil trade over the gas trade, but they're very similar. I think oil and gas have both found some lows here. 14 years. Wow, big time. Okay, oil will hit $58. Yeah, US oil probably will hit that when we go into whatever we're going into in 24. you're not wrong. But I think first we have to have a bit of a push up, which is a big thing here. So let's see if anyone actually got this right. I don't know where it is. But if anyone mentioned real estate, you would be number one. There's no doubt in my mind that real estate is the easiest. And you might say, Thomas, not a trade. Well, you ever seen flip or flop or flip chasers or whatever they are? So yeah, I mean, it is still a trade because you can get in and out within 12-month periods. So technically, I'm going to call or 1 to 2 years. It's easiest because of the types of people that you're often up against. Now, that's not to say everybody in real estate's stupid or something. Of course not. But you're not actually in a market that's necessarily got hugely sophisticated people. It does and it doesn't. So therefore, it's actually the easiest trade. Now, if you were to say what's the second easiest trade, it's going to be stocks. Why? Because there's the most amount of other people in it. It's the second most traded thing. Now, if you were to say what's the hardest trade, I mean, I'm going to go with soft commodities. Soft commodities are a pain in the ass. They're scary. Now, you could say, well, they're easy. Where I think soft commodities are the hardest is on the short time frames. Not necessarily the swings, but the short time frames. Oh, brutal. Brutal. Lambo says, come on, man. What do you mean? What do you mean, Lambo? Come on. What do you mean? Best strategies, patience, risk management, diversification. Diversification, though, I've got another way of thinking about this. Now, obviously, I've learned a lot of diversification strategies over time. And I'm not here to say that I'm better and I don't like diversification. But Druckenmiller has an interesting quote. And he says, diversification, I think it's Druckenmiller or maybe it's Buffett. I don't know. But anyway, I don't think it was Buffett. It was diversification is for people that don't know what they're doing. Now, that's actually kind of true because diversification is for when you're not sure of something. Now, that's not to say it's bad. It's actually a pretty good strategy. And for most people, it's the way to go. First in real estate, yeah, Lambo, it's too easy, man. Why do you have the Lambo? You got to think of yourself. It makes perfect sense. Your parents, your friends, the friend that doesn't even like investing, that doesn't even know what they're doing, has no idea about money, barely saves any money. When you say to them, oh, hey, this thing's on sale. Oh, I don't need to buy it on sale. I just buy it brand new. I don't care. I buy the Fendi bag. I buy the LV bag. You got to remember these types of people are in real estate and they're buying them for whatever they feel like it's worth because of an emotional attachment. So of course it's going to be the easiest because there is an emotional attachment. People get emotional attached to stocks too. Tesla's a great example of that, which by the way, we'll look at right now. So yes, it is true. Now I'm a stock trader. I love stock. I love all trades actually. And if people say, oh, I hate a trade, it's because they don't understand it. You might say, well, Tom doesn't understand soft commodities. Maybe I don't. But anyway, I don't know. Do you agree with me, chat? What do you guys think? Do you agree or not agree? So let's talk Tesla here for a second. So Tesla obviously broke down last week, went underneath, and then came back with a vengeance. Had a nice rally. It's through this trend line. There's a lot of people fighting with this. So I see a lot of people saying, oh, Tesla's negative, Tesla's positive. At this stage, I would say it's probably a positive breakout. We do have a heavy trade zone in front of us at 257, but we also have a lot of catch up to do if it is going to come back in line with the SPY, which is probably more of a $300 plus target. Now, obviously, it's under fire at the moment from all sorts of downgrades, Cybertruck this, Cybertruck that. I don't even know if it's any good. But I do think that these levels are interesting. So at the moment, we actually do have a potential catch-up trade in Tesla. And do remember the options that we put in on the last 2 days were semi-supportive of a Tesla rally. So that was something that was coming out here. John says, bat gas, good advice. Bat gas? The Widowmaker. I hate natural gas. It's very terrifying trade. I always say that it's not the best one here. Oh, it was Munger versus the diversification? Yeah, well, there you go. But look, doesn't mean it's bad. That was Buffett? Okay, I can't remember who it was. Anthony says, I would agree. Stocks bloodbath incoming? Possibly. I think that it's just a matter of time. When we go parabolic, a bloodbath usually does ensue afterwards. The problem is that it can stay parabolic for a while. So you would have seen with Wayne's details, and he brought out some good stats there. I don't know where I've got the stats here. But basically, Wayne was talking about this week the idea that we were going into a fairly good run, at least statistically. And you can see that this week's kind of like a 50-50. Might actually bring the Grinch. The Grinch would be interesting. But over the next 4 weeks, that we'd usually go positive, 16 times up, 4 down over 20 years, with a pretty good average return and a pretty good year return as well. So again, more stats that are kind of pointing towards a rally and rally and rally. I tend to think that 2024 is still going to be quite volatile, because when markets go parabolic, they will eventually end badly. It's that quote I keep crapping on about. But yeah, that's a fairly big deal. Let's talk oil here. Oil is one of the ones that's interesting me at the moment. I feel like oil is trying to get long, and it's broken to a new low, which came into that zone between 67.50 and 69.50, which we've been talking about heaps and heaps of times. This is a critical level for oil. It's super oversold. Obviously, I expect it to go to the most traded zone of almost $74 a barrel. So that's going to be a key level for it. And it makes sense to energy stocks as well. And I've mentioned this a few times recently, because I do think that energy stocks are a little bit undercooked, kind of cooked up. They've been going down. They did show some signs of strength. Look, nothing is for sure. Of course, that's the truth. It's just, everything is playing stats and odds. But it's an interesting one because, of course, we did sell off. It's one of the last sectors that hasn't really seen much recovery. So that's an interesting point. Let's talk yields. So people mentioned treasuries before. What do you think? Well, I think yields are going to continue to drop. The stats are that over the next 12 months, I shared this in our private community, but I'll just tell you the basic stats here, that over the next 12 months, we will tend to, actually, I'll put it in the newsletter as well. So make sure to sub for that newsletter. I'll chuck those stats in the newsletter. That over the next 12 months, the chances of yields being higher than they are right now was only 26%. So in similar circumstances. So it's incredibly low chance that yields will be any higher than they are right now. Now, because of that stat, of course, that should mean that treasuries also are going up, because yields will be down. That will bring treasuries up. It's only part of it. But even if we have economic instability, what technically do most people want to own? They want safe haven demand. And it's not going to be US dollars. They usually go for treasuries. So yeah, after this hysteric sell-off, I would say that there's a good chance there. Lambo says real estate mentally easier because it's not valued every day. It's also leveraged, man. You got to remember, Lambo. You got to think about it. It's not just that real estate is easy from that aspect. It's actually a massive leverage loan. So yeah, there are some easy points there. Anyway, look, the costs, there are so many. It's not liquid. The costs, you can get brutalized by going in the wrong markets. Don't get me wrong. There's still massive pitfalls like there is for any investment. But I'm just saying, overall, you have the least sophisticated market. So you go real estate into stocks generally, and stocks are actually the second least sophisticated in terms of the main liquid investments. Believe me, bonds are harder. Bonds are harder. Michael says, listen to a portfolio manager this morning. First, the immediate price action loss in bonds, and on delay now elevated housing market risk combined threaten banks. The centrals save them. I think the thing with banks and insolvencies and stuff is that we know that I'm actually very not against. I don't think the banks are going to come under fire. And I'll be real. I think that what we saw in March of 2023 was an absolute disgrace. Okay, I'm going to say it right now. It's a disgusting disgrace, because what it's going to do is it's going to kick the can further and further and further and further into the future. Now, hey, it's okay for me. I don't mind. Let's bring the bull train if we feel like it. That's all good. But what it is that it really is showing you that the central banks have completely broken the economy, and they will continuously have to do this because they don't want to deal with the issues. Now, you can't anymore. It's actually broken completely. So eventually it will come back to kick us all, and it will be a Great Depression. And I'm real. It's going to be a Great Depression. It's going to happen in under 20 years for sure. If I had to guess and you had to put me to a guess period, I would say within the next 5 to 10 years is highly likely. Before then is unlikely. So probably more like 4 years plus at this stage. But it's going to be pretty brutal. And that's because central banks will continue to provide liquidity. Now, if you were to say to me, though, Michael, hey, the Fed couldn't print 20 trillion. Yes, it can. And it will. It can and will. And if you disagree with me on that, that's fine. But I'm telling you right now, the Fed can print $20 trillion. Not a problem. Not a problem. I did some kind of weird algorithmic stuff with a few guys, and we kind of came out with some really creepy numbers about how far they can go. Borgo says here, in your Saturday video, you said parabolic markets don't correct sideways. And 2 minutes later in the video, you said an analyzed chart saying, oh, yeah, this went parabolic and then followed up. Oh, no, 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 no. You misinterpret. This is the problem. I know exactly what you're talking about, sir. Okay, so what I was talking about over here, you're talking about when I went back over to this period here and I talked about 7 weeks up. So here's the, here it is. So this is where we had like a period where we went 7 weeks up in a row. So we actually had, look at this, so many weeks, so many strength weeks. Yeah. Then we went sideways. Okay. Then we went up. Then we went parabolic. Then we crushed. All right. So it went, but you got to remember the key here is that this is parabolic. This is when you start to move out of one standard deviation. So if you went to think about like the bell-shaped curve, this is the problem. I talk so much that maybe sometimes I don't articulate my exact way of thinking about it. Believe me, they're pretty well thought out concepts. So basically you have like a standard deviation of the market each week, and we call it the expected moves, which is obviously based on options. Now, you'll have your first standard deviation and your second standard deviation. It's pretty rare to get into a second and third. For 2+ weeks now, we've gone to the second barrier standard deviation. So 2 SDs 2 times. So that's actually getting into parabolic movements. Now, once you get parabolic movements, they don't correct by going sideways. They tend to dump. Okay. Now, what happened last time was when you went 7 weeks up, you went sideways initially. Okay. A little bit different though, because this wasn't parabolic. Now, if you come over to where we are right now and you look at the overall standard deviations, you'll notice that we have just put in a very nice week. Now, if we had another double up week where it started to go up again and then blew up huge into 2024, that's going to be a very clear sign that when the crash happens, and usually what you do is you ride those babies up. You go, yes, bring it to me. But you got to be prepared that when it goes down, it's going to get brutalized. You want to tell, I'll show you. Here we go. I'm going on my rant. There's Moderna, okay? This is a classic case, classic case standard deviation move. Now, you might say, oh, that's obvious, Tom. Yeah, well, at the time, I'm telling you, because I was live streaming this, believe me, when I said Moderna's probably going to fall, people said, you are an absolute beep. Are you ridiculous? No, it's not, bro. It's buy the effing dip, okay? That's what they said. And they were buying anything back then. People know because, you know, you're watching. Most of the streamers that were doing this type of stuff, they're probably not around anymore because, unfortunately, I would assume, and I don't know this, maybe someone in the chat can tell me, that probably a lot of people turned against them because they got their ass kicked. And the whole time through this, I said, oh, yeah, these are going to end real badly because now we're into these huge SD moves. Now, once you go there, it's not going to be sideways action, guys. It's going to get brutalized. And that's the thing. It's going to get hit. And that's what happens. Anyway, that's my point. You seem to be hating on me here. So what did you say here? Minute 10:38. Yep. Look, my point is this. Okay. That's what I'm getting at. If I misspoke, well, you know, I was sick as a dog. So what do you do? But my point is parabolic. If I was talking sideways, currently is sideways. I expect crash March 2024, a big correction when first rate cut comes. Yeah, so that's a great point. I still maintain that for us as a community, at least the way I think about it, I'll be looking for this, which is uninversion of yields. Excuse me. One sec, guys. Oh, yeah, bro. It's okay. If I did say it, it doesn't matter. I said it, but it doesn't change anything. That's exactly what I'm talking about. Okay. It's all good. It's all good. All right. So US 2-year versus US 10-year. So here we have the inversion. Obviously, we know that until this goes back underneath 1%, it's very unlikely that we have a market to be super fearful of. Remember, it's when it uninverts that we have to be terrified. And ideally, no one would be talking about it. Okay. So you want uninversion of yields, markets up, it's all great. And nobody is mentioning it, or very few. If everyone's mentioning it, it's not going to work. Very unlikely to work. He's gone, dude. He's gone. Puff, puff, pass, Tommy. Nah, dude, I had whatever you want to call it. The thing we don't even mention. Well, I'm pretty sure that's what I had anyway. Permit Fisher, $4.99. Thank you very much, Permit Fisher. Always supporting the channel. Appreciate it very much. What comes first, Crash or W? W set to kick off mid 2024 peak of solar cycle. Is that true? Interesting. I think the thing is that with the W, where it's very impossible. I think that's almost impossible to predict. So look, there are some people that I know that have got models for it. It's very, very difficult to model out, and also even to think about it. I will say this: generally speaking, if a country, I'll just say this is history. Okay, this is history. If a country invades another country, traditionally, it means that the person in control, so that is the person in power, is about to lose control. Now, that could mean for many different reasons, but it's pretty much one of the oldest tricks in the book, and it's to galvanize their leadership. So, if let's say there was an issue monetarily and it was falling apart, let's just say that it could be one of the reasons. Can markets crash by inflation like the 1920s? I would say that we don't have, well, the 1920s ran for a long time. So you would have to say, okay, well, that's possible, Kenneth, but wouldn't we go for a bit longer? So, you might say, well, Tom, we've been going crazy since 2010, man. So we've been going wild. So really, we're beginning of this. I would say that we've got a few more years before we get that kind of thing there. Thank you also to the 800 people joining us. I will hope that each and every one of you does have a Merry Christmas coming into the end of the year. I hope you've done okay recently. Have people done okay in the markets? I hope that they feel like they've navigated okay, and you haven't, at least hopefully you didn't short the crap out of it. Hopefully not too many people did that. I would say most people that have been watching the channel, objectively looking at the markets, we've talked about, I don't know how many times I've mentioned don't short dull markets. Or if you did, just go with the little option, a little day trade. That's it. Just, trying to get in, be nimble and get out. Don't be holding that thing. So hopefully that's been saving some people. I'm sure others have been getting their ass kicked, unfortunately. But I'm sure there are some channels out there and some people that it'd be pretty brutal right now. Look, this is not normal. It's not a normalized market, but yeah, you have to look at it. So US 500 again. We are pinned between 4,700 and 4,800 theoretically this week from an option style thing. This also makes sense. I would like to see a 4,776 to 4,800 read. Ideally, I'd be going still towards the bull side this week, and then hopefully start to see something kind of cracks appear. Now, the Grinch will also be an interesting one, which is the plus 3 days coming into the trade of Christmas, plus 3 afterwards. We'll report on that and obviously be talking about it. At this stage, it looks like energy is potentially an interesting area. We've also got some increases in some of the mid caps and small caps, which still have some room to go. However, Russell did hit one of the biggest targets last week. There's no doubt about that. So I wouldn't even blame people to be profits into Christmas and be like, it's all pretty good. Igor says, I'm doing nothing right. Too confused with this market. Fair enough. If you have confusion, Igor, don't trade it, man. Come from the profit targeting concept of patience, react, and predict. Go to other markets. Maybe there are easier trades in currencies. Currencies have been relatively easy the last couple of weeks because of the big central bank moves. So maybe that's where their targets are at. Now, there's an interesting one here for Google. So I don't know if Google has a very good technical on it, but it does have some interesting stats. So I was looking up some stats on this one, and it has actually usually a pretty strong strike between now and the beginning of January. Not sure if it'll continue there, but it's interesting because it's in some kind of accumulation. And over the last 10 years, it's been, let's just say, relatively good. And that's just a stat by itself, but I haven't really found anything great in technicals here, but that'll be there. Um, One more, Dally says, Tom has kept me from losing my ass all year. Oh, that's good to hear. Input on Crocs. Sure, let's do a couple of requests here. Bring out your big gun stocks. I want to see some good ones, though. I want to see good technicals. You give me crap, I'll tell you it's crap. You give me good ones, good ones. So Crocs, I've already had a fairly strong bull case on for a little bit here. I have enjoyed the Crocs move. I thought it was pretty nice. I noticed on Amazon as well today, best sellers, #1, Crocs. Yeah. #1, Crocs. And that I don't know why, but anyway, people are buying that thing. So I'll just bring this on for a second. It's too funny. Love that. Uh, yeah, so I do like it. I think it's got maybe more room to run. You can kind of see what my targeting kind of concepts were here. At this stage, it's a relatively decent strength kind of cycle for it. Similar to Nike, I've had some pretty strong moves on Nike. Nike's very close to the end though. This has actually been an incredible move. You know, Nike first kind of thought about this about 103 and 103 to 120. I mean, it's not too bad. I mean, you think about that as a percentage on a decent stock, 18%. So there are a lot of different opportunities. We did Vail a little while ago. Obviously, there's a ton of stocks here that I've been talking about. Now, the one that I think was surprising for a lot of people was probably Rivian. And I think Rivian had a really good technical breakout on it. SoFi was another one that last week did really well. I got to say, this one paid out big time. $8 to 9.30 is no joke. That's decent percentage. So they were pretty nice there. Lots and lots of stuff here. Shop is on the move. I would say Shop is probably already. A lot of these have kind of gone already. Shop's got a nice flag on it, doesn't it? But geez, it'd just be a flag trade. It'd have to be, well risk managed because yes, it does have a flag. It had two types of accumulation at the moment. It's clearly in the bull run. But yeah, whether it can hold up or not, we'll find out. How to prepare for $20 trillion destruction. Well, 20 trillion wouldn't be destruction. It would actually be an injection. So it would just be supportive. What I'm saying to you is that I don't think the market's going to dump like substantially until we see a real worldwide global crack. Now, that could come on due to the W word. It could come on due to real estate. And I would say they are the two. They're pretty much my two factors. It's one of those two that leads us into the next horror show. USD 30 year is adjusting to the idea that we won't be going back to ultra low rates in the last 15 years. Correct, Kevin. We'll be stuck for a bit and we'll be stuck at a higher normalized rate. So probably somewhere. I'll let you in the chat. You decide. What do you think? What's going to be the rate over the next 20 years? According to, not that the rate yield will be correct, but let's bring it up. Let's see where it is right now. Where do you think this thing will stabilize at? So currently 4.193. I'm going to give you some context. Here is the US 20Y over the last couple of years. What do you think? Then we'll do a couple more stocks here. Discuss uranium. I'm super bullish on it the long term. Fair enough. I don't hate on that. Can you talk Cisco? Cisco had a really bad earnings followed by a decent island reversal. I can just discuss it because I know the chart. And I still think it's relatively low. Risk reward is okay from a potential technical level. Looks like it's going to close the gap. Yeah, you'd be looking. I assume you're looking at the island reversal trade. Okay, so a few of you people here saying that thoughts on SoFi. I still think it's got more to run. I don't even know if it's a good company. I wouldn't care. I mean, from the technical, it broke out, and as long as the Russell and those kinds of stocks continue to move, we should see uptick in SoFi. So people here are guessing 2%, 3%. Yeah, I would say somewhere around 3. is my standardized level. So I would think that we get into 2.5 to 3 would be my call. But we're not going back down here until we have some kind of recession, like really bad one. Yeah, 2.75 is a really good call, I would say. ResMed, big moat boomers going into retirement, buy and hold. ResMed. Scott, yep. Well, if you've been in our private group, Scott, you would know that I have not been hating on that stock for quite some time. PFE bottom yet? Yeah, so Pfizer is an interesting one because Pfizer just got smoked last week. If you haven't been following it, I would say it's in capitulation, and it actually took out the lows here of 2020. So I do think that Pfizer's too low. I do also think that it has some of the signals that show bottoms. Now, these are different types of bottoms. These are aggressive bottoms that come out of huge volume, that come out of absolute fear. And you've got to put yourself in the mindset of someone that's owned Pfizer for a while. This would have been so horrific to go from 28 down to 26. See, when you look at a chart, it's not just to say, okay, well, it's down and I look at it from a buy. Put yourself in the mindset of what if you had bought it before? What if you bought Pfizer at 36? What if you bought Pfizer at 50? What if you've been holding this whole way down? Would this have been the one that wipes you out because it went underneath that low? It's highly likely it would have been. So you can see that someone got leveraged because otherwise you wouldn't have seen such massive volumes. So Pfizer is a very interesting one at this point. It is not without its own risk, though. It's an interesting chart. And there are replication setups that you can do in this, but you've got to know how you trade it. What's your thoughts on TAN? Nothing much has changed on TAN. I do think it's been a pretty good run. I was mentioning today that I have a feeling that the weekly 20s are a bit of a nuisance for it because you can see here the weekly 20 moving average. So we nailed into that. So maybe we'll go. So far, I don't know, 10, 11 something. Look at it on the chart. You'll be able to see on the left-hand side. There's plenty of areas there. Do Australians say Nick or is it pronounced Nicky? Nicky, Nike. No, we say Nike. Do we say Nike? Nike. Yeah, we don't say Nike. We say Nike. So like Nicky. Yeah. I would say Nike. It's like McDonald's. People call it Macca's here. Macca's. Got to get the Macca's. I'm telling you, Americans, I know now you don't really rate McDonald's, but in Australia, oh my God, everybody, they love McDonald's. I don't understand it. Frankly, I think it's trash. But that being said, people like it very much. I mean, you will go if you go to fast food in Australia, you go to the McDonald's, it always has some queue of people buying that crap. You go to the KFC, it's got like half a person, not a full person, half a person. You go to a Red Rooster, which you probably don't have anywhere else. Nobody, crickets. Go to a Hungry Jack's, which is Burger King, half a person. So you got half a person at Burger King, you got half a person at KFC, and you got about 50 people at McDonald's. And which is the best McDonald's mascot, guys? What do you think? It's not Ronald. Let's be real. What's the best McDonald's mascot? I'll give you my one, but I want to see what you have first. Let's go through a few more stocks. Let's do some rapid fire. 1 second. $100 people at the kebab store. That's probably true. All right. Let's do a couple of stocks here. UNH. Okay, let's do these quickly. United Health Group. Interesting stock. Has some good trades on it sometimes. At this stage, I love this base. I remember that base. It's at target for a lot of resistance. This level here is an interesting one to see a bounce off. You could look for maybe a break of that high to get some momentum. It is what it is. Not really a fantastic area, but certainly it has some possibilities. Amazon. Now, traditionally not a great time to own Amazon. It has been trending higher. It's not really a great time of year generally to be opening into Amazon. I'm actually bullish on it to about 163, but I'm not sure if it's going to hit it over this period. But you can see relatively strength there. Let's do Walmart, SBUX, Nova, Neo. Neo was requested a few times tonight, so let's do that one, or this morning. So Neo is an interesting one because it hasn't really gone with some of the counterparts. Now, I don't know whether this stock is worth anything. Maybe it's worth zero, okay? But from a technical perspective, you can see I've got an alert at 854. It's coming out strong here today. So I think this is a pretty strong, options kind of, people are getting a bit excited about it. You can also see we have these rejection wicks. I think getting above those is a fairly big deal. It does have a big runway. I've targeted in about 11 as an interesting runway. So I would guess the risk on this stock is I don't actually personally think it's worth much. Now, that doesn't mean anything when you go into trade, but risk management would be key on this type of thing. WBA, let's have a look. Walgreens. Now, this thing got beaten up, and I did actually talk about this last week, and it's had a couple of good sessions in it. You can see here the daily went really strong. I actually like the base because it has huge volume. It's funny how a lot of you are bringing in very similar stocks. So, yeah, I've done the analysis on this. It did hit first target, which is this supply. I'd like to see it actually pull back before going strong again. Something like a 23 on Walgreens would be kind of cool. Let's have a look here. Germany loves McDonald's. There you go. The Hamburglar. You're all wrong, guys. Okay, it's not any of these. Okay, I'll show you who's the best. So the Hamburglar was pretty cool. We have the best. Okay, and the best is Cheeseburger Head. Why is Cheeseburger Head not coming up? We love Cheeseburger Head. Man, the pictures are getting tough to get for this one. We need to get the Cheeseburger Head. Oh, they made a pop toy of Cheeseburger Head? Hell yeah. I'm going to go buy this thing for Christmas. Yes, Mayor McCheese. Mayor McCheese is the boss. Love the Mayor McCheese. So ridiculous. Love it. I can't believe there's a pop figurine for Mayor McCheese. I thought no one even knew what that was. Mayor McCheese. 99 cent. Thank you very much, Larry. Appreciate the support here. Let's go through some more here. We've got DG coming up. DG, Dollar General. Been a while since I looked at that stock. Is it good? It's obviously gotten crushed. Very difficult for me to read this one, just because I feel like it's obviously done a turn, but at the same time, a lot of you are going to go, "Oh, well, I need to go up here." It's not a replication for me. I don't know whether it's a base or not for that one, unfortunately. Let's go through some more here. Ryan says, "I told you." Yeah, a few of you would know this one. We did United Health before. The Mayor McCheese or Grimace. Yeah, I love the Mayor McCheese. Contrary to educated suggestion, is the S&P consolidating sideways after recent extreme moves? At this stage, you would be correct. Of course, it is sideways at the moment. It's two dojis. What's that mean? Equilibrium or fair price? We don't know the break. So at the moment, this option suggests between 4,700 and 4,800 will be where the market ends this week. So it suggests actually more dojiness this week, not like that one of those big SD moves like we had in the previous 2 weeks. Time to take a chill pill. That's what the market's saying into Christmas. Now, that doesn't mean it's going to do so, but yes, you would be correct. It's currently sideways, but these types of parabolic trends don't tend to end sideways, is what I said. Walmart, let's have a look at Walmart. I heard Costco was going pretty strong. Walmart got crushed, didn't it? So this one got crushed. Now, Walmart's an interesting one. It came outside of my trend line here. You can see the trend line going all the way back to 22. So I've done a little bit of analysis. At my stage, I don't actually want to get into Walmart until it's above 156. But I do have an alert on it. I can see the downward trend line, those types of things here. Anthony says, you should have seen when KFC opened in Lebanon, it was packed. Is that true? Really? Wait a second. I don't know if I'm getting trolled. Meta. Let's have a look at Meta. Let's check out here. Meta. I know that KFC was really popular in China when I was there. It was really popular. Let's go to 330. I don't like Meta here. I think it's at highs. This stock I always hate though. I'll be real. I never trust the Zuckerberg stock. But yeah, I don't like the price action. I don't like the level. I had it marked a long time ago, so for me, it's not big here. John says KFC is huge in the Middle East. Okay, there you go. I agree. Well, it's hidden in China. I've never been to the Middle East. I'll have to come. Wow, I've been, but I was like there for only a very short period of time, I guess. What about Uber? Uber might have already done its run. Uber was a good pickup though, if you had found that one a little while ago. So Uber got crushed and then it went ballistic. It's on super momentum, but I'm not going to say it's the end of the trend. Obviously, you would probably be taking profit around this zone traditionally, but that's a parabolic trend as well. Let's go some quick crypto here just to get into it. So we've got here Bitcoin. Obviously, you guys can see what's happening with Bitcoin markets. The market went kind of dull, then it went parabolic at the end. It didn't quite hit some of my targets, which was 46, 48. It did hit some other profit target levels, which was kind of cool. And then we got that sell off. Then we had the rally up to pretty much exactly where we said, which is 43.5. And I think it went 43, 4, 4, 6, and then sold off. So mark out new low because I want crypto to come down here. It would be better, even though I am actually a Bitcoin longer. Now, not necessarily as a trade, by the way, it's a bit different, but as more of a investment philosophy as an alternative asset. I would like to actually see it kind of follow that normal trend. So we'll do a special on crypto over the break. So that'll be a pretty cool deal. We've got some massive super chats coming in here. We've got Ram coming in. Thank you very much, Ram. Always a pleasure. Great to catch up with you in Vegas as well. It was awesome, man. Thanks for the awesome mentoring classes. Appreciate it, man. Helped me to be very profitable. Loved your courses. Yes, you did all right recently, Ram. So thank you very much for the $20. Thank you also for taking me out for a very, very good day or night on the town, I guess, in Vegas. It was amazing. I do look forward to coming back to America and meeting more people in the future. And it was awesome. Thank you very much, Ram. Merry Christmas as well to you and your family. Quill Owl, $5 Australian. Aussie market, please, Tom. Fair enough. All right, let's have a look at the Aussie 200. Aussie 200. I'll also say this, guys. Credit to Ram as well. He's put some good work in on the markets, and I have obviously worked with him quite extensively. And the amazing thing is that when you start to be more patient, he basically totally switched it. And you've got to be proud of someone that can do that type of stuff. Now, it's amazing how good he is now at sticking to his targets and sticking to his regime and sticking to his plan. And I think that maybe is like a New Year's thing for a lot of people as well. You've got to have some kind of plan. When you have a plan, stick to it. And if you don't stick to it, you're going to fail anyway. So what I mean by that is you kind of like just like making random decisions. Now, if the evidence changes and you have to change the trade, that's fine. But if you don't stick to your plans, you're very unlikely to be able to be long-term profitable. And I think that's one of the kind of big things here. The Aussie market hit one of my targets there, Quillal. So basically, this is an area which I do like for the Aussie market. And you can see that it's inverse head and shoulders, beautiful kind of turn into this point. I'm still bullish on the Aussie market because of Chinese New Year. And I think that will help to buoy things like copper and things like gold. Not so much gold. Gold will just do its own sideways crap for a little bit here. But, a lot of the metals hopefully do start to increase. And one of the things I'll be watching with the Australian market is also things like sorry, 1 second. I need to get my iron ore code, which I think is FEM. We'll just use this one, whatever. So you can see here that iron ore broke out recently. So kind of feeling bullish about that as well. So I think the Australian market could have more in it, but it's going to ultimately go with the US. So great target level. My concept is that Aussie market could continue strong here. ADA USD, please, Tom. Wow, ADA. Haven't done that. I just want to do it because I haven't done it in ages. Where are we sitting with Cardano? Cardano. Actually, I sold my car to a guy, and he has he he's like hey Tom, I'm like, yeah, yes, I got a $250,000 Cardano. I said, well, $250,000 in Cardano. He goes, $250,000 Cardano, baby. That's it. I was like, jeez. He's all in Cardano. That's all he cares about. But yeah, he loves this particular one. Let's have a look at it on the charts. All right. So look, Cardano is one that tends to come later on in the party. Actually, 55 is not shocking. A bit annoying, I guess, if you hadn't already seen it. But yeah, these are the type of one that when the crypto market starts to go a little bit more tasty, usually Cardano does come along for the run. Now, there is one coin that I don't like that's always in the top 10. Can anyone guess which coin I dislike the most, even though you probably don't care? The Cardano is quite strong. So the Cardano has probably based off, and you would say that this is traditionally kind of the way you would usually look at a market basing off. Now, what I'd like to see is it kind of come down. And yes, for all your cup saucer kind of fans, that would be better if it did something like that. But yeah, look, it's hard to read here on the charts, other than to say, well, okay, it's probably based. I would like a 40 cent, in the future. If Bitcoin comes down a bit, that might be happening. Netflix, sure, let's do the Netflix. So what do you think my most hated coin is? And someone's going to unsubscribe when I say this coin. But don't do it. Just subscribe. Don't unsubscribe. Okay, bring some Christmas cheer. It's not, I'm sorry. I'm sorry if your community traps people. Okay? And what I mean by traps people is I don't know why, but I have this friend, and every single 3 weeks he sends me a thing and he goes, Tom, what do you think's going on with this stock? And I always say the same thing, bro, it's not going anywhere. It said this for years. It's not going anywhere, dude. It's not going anywhere. And he's like, no, the story's good. And I'm like, it's not good. It wasn't good 2 years ago. It's not good 1 year ago. It's not good 6 months ago. All right. It's never good. It's always bad. Can you guess the coin? Let's see. All right. So here's Netflix. Actually, decent break in terms of going back above. Looks like it's accumulating. A new breakout high could be an interesting one for a momentum-based trader. Not my kind of jam, but yeah, it's all right. So people are thinking it's the SHIB and the Doge. It's neither of those two. At least with those, they have incredible gains and incredible lows. This coin is like you sit there and you go, it's going to go. It's going to go. It's going to go, baby. And then it goes up 10 cents and you're like, yes, here it comes, here it comes. And then it goes down 10 cents. Okay. That's what happens. It goes up 10, down 10. And meanwhile, all those people in Cardano and Bitcoin are talking about 100 bags. And you're sitting there saying, where's my 10 bag? And the answer is XRP. And you guys all got it right. Avalanche, I missed. I'm so pissed. Another one of those mid coins. Yeah, I can imagine a lot of mid coins will be going at the moment. Those weird kind of things that are always top 50. It's XRP. You guys know it. Even the bag holders know it. Even the bag holders. At a barbecue, I couldn't believe it. One of my wife's friends, she said, Tom, I've got a crypto. I said, oh, God. I said, I know. I said, stop me there. I said, you got XRP, don't you? She goes, how did you know? I said, how did you even get it? She doesn't know anything about crypto. She doesn't even know what Bitcoin is. I'm like, how do you own XRP? I said, XRP infiltrates the minds of everybody. I said, what price do you have it at? $4. I said, no. She has $4. Do you think it's ever coming back? I said, no. How do you get $4 of XRP? Oh, it's like the worst buy price ever. Oh my goodness. I said, chalk that one up to never making decisions based on random stuff on the internet again. Oh, I want to show you guys. You have to see XRP. I know I'm ranting. I know it's Christmas cheer, guys. Christmas cheer. Sorry if you love XRP, but be a realist, guys. Be a realist. Now, if you can kick my ass if XRP comes back and you're like, suck it, Tom. I told you this baby's going up. Well, good for you. But it's been a long time coming. Now, which one of these things actually has old history of XRP? There it is. Look at that. It's not even the old history. Look at this. Look at this thing. The never-ending lawsuit. Xmas cheer. CRM. Yeah, I don't mind CRM. So I've talked about that before. Salesforce with its Einstein or whatever it has. It does actually look pretty awesome on the charts. It looks like it wants to go for the high. This is an early adopter of AI. So a lot of people kind of go through AI and they think, well, I'm going to make tons of money off NVIDIA. Okay, sure. That's hardware. Now, what did I think about implementation of AI? Well, initially, it's quite easily implemented into Microsoft. Now, that doesn't mean Microsoft long term is the greatest AI win, because it probably isn't. But it's instant additions. And I feel like CRM is also instant wins for AI because it's so easy to implement the technology that we currently have into it. Amazon, I believe, is going to be an awesome one as well in the future. And of course, you've got most of the Mag 7 has been pretty strong plays. But yeah, CRM in particular, I think was a bit of a sleeper until recently. So it does look good on the charts. It looks like it wants to go for it. If you were playing standard flag theory, let's say the breakout here, and then use that kind of breakout in this one, which is about there. Yeah, you're looking at the high. So it's possible 300. I have 5,000 XRPs, sad face. Well, I hope it goes to $20 for you. Okay. I hope it goes to $20 for you, but let's be realistic. It's probably not going to do that. It's probably not. But then I also have this crap coin that somebody in my community that probably isn't watching anymore said, Tom, you've got to get in. I'll give you the VIP entry. Okay. And I thought, all right, I'll throw $2,000 into the VIP just because I thought it would be kind of funny. Yeah. Now, this $2,000 was at 5 at one point, admittedly. Okay. I forgot about it. I logged in the other day because someone said, how are the crap coins going? I said, I'll have a look at the crap coin portfolio. Now, these are just all like $2,000 randoms. How much do you think? Now, this coin has performed worse than XRP. How much do you think this crap coin is worth right now? Okay. $2,000. Not everything's but sunshines and rainbows and lollipops in the crypto world. What do you think my $2,000 was worth when I logged in? Kevin says, wasn't me, lol. This thing was the least VIP. This was VV non-IP. But then again, I do remember when he got me in, everyone wanted it and it went up and it was flying. And no, it wasn't the sea rocket. $60. That's going to be a pretty close call. About $60. Ah, an obliteration. That's why we stick to the stocks. The stocks and the cryptos we understand, guys, not these random things. Not these random things. And this one even had good art, okay? It had actually a nice website. It had a good plan. It didn't really have a good plan. To be real, I knew it was an absolute crapshoot and I didn't care. All right. So anyway, guys, this week, let's get into it and finish it up here. We're definitely looking at oil. We're watching oil. We're going to watch Tesla a little bit because that's interesting. We're obviously focused laser eyes onto the US 500. At this stage, options are suggesting that markets are trying to grind a little higher. German DAX is weird and probably looking towards the downside. I'll get the retail futures traders report tomorrow out on X, so make sure to sub on X. Hopefully you enjoyed my rant today. I know it wasn't really about market price action. Sorry about that. But hopefully there were some good learning curves. And I did want to say a big thank you to each and every one of you that watches every day. I came to the US this year. I met so many of you. It was amazing to see. Some of you watch every video. I couldn't believe it. I was like, thank you. Truly. It is an absolute blessing that that people even watch our stuff. And yeah, okay, I've done this for a long time. I love markets. I love everything to do with it. I think about it way too much. And hopefully you've learned some stuff through our show that we've been running. But I do want to say a massive thank you. We hit almost 160,000 this week. And, that's pretty amazing. I never thought we'd get, wow, I had a name for 100. But to get past 100, I thought was almost impossible. So with the niche that we were in. So I do want to say thank you for subscribing. Thank you for liking. Thank you for sharing. It is my Christmas gift that I've been given by you guys. And I wish you all of the best for you and your families over this year into the end. And of course, for 2024, I hope you stick with us through 2024. I expect it to be a very interesting trading year. I do hope you made a little bit of money, ideally, off your own ideas, which obviously you made your own informed decisions on. And yeah, I also want to make an announcement that, of course, we will be coming back relatively strong, I think, in 2024. So we'll continue the newsletter through 2024. That'll be free. Links in the description. I think there'll be some amazing stuff going on there. We might try to get a couple of people on the show for some of our live streams so we can get some other opinions on there if you're interested in that. See how that goes. And I'll be rejigging quite a lot of stuff come February, March as well. So I got a lot of plans for 24, more than 23. 23 got side railed by obviously the birth of my son. But yeah, thank you very much for watching. I appreciate each and every one of you. And with that, we will be signing out for the rest of 2023. Now, don't worry. I'm not getting rid of the daily show. I'll still be doing the daily show this week, every day. Then I'll take basically a week and a half off where I'll do 3 shows a week. And then I'll come back hardcore, okay? We won't be doing a live stream for the next 2 weeks, though, okay? Now there, I put a caveat. If the market goes crazy, we might be logging on, all right? I can't help myself. And then I'll make the announcement. But if the market's just going to be like, oh, yeah, we're up, down, all around, I will take a small break from the live stream because these run pretty late. It's 12 o'clock at night right now. And yeah, we will be doing that. So 2 weeks off, come back. Obviously, daily show continues this week. And yeah, we'll keep doing the daily show. It's just the live session that I'm kind of just suggesting that I take it down for 2 weeks, unless the market goes wild, and then we'll do it. Anyway, there you go. Happy, Merry Christmas, everything like that. Have a great New Year. Happy New Year. And if I don't speak to you live before then, otherwise I'll see you on the daily show. I'll say it again on the daily show. But truly, truly appreciate the help through building this channel, because honestly, the guys that have been watching since our first hundreds, the Australians, some of the people from America that watched us and found us and viewed through that point, into just the tens of thousands where we got the support. It's just, it means a lot to me. We ground this community out. Like, we've never done a video, if you can believe it, we've never had a video crack 150,000 ever. You find me another channel where we've had never gone above 150 and we've got to over 150. I think it almost may not have ever been done. Truly. And that's because we've got a massively loyal community, which we're all helping each other together. So thank you so much, and bye for now. Catch up. I should have had a song here, but I didn't have anything planned. All right. See everybody. Bye for now. And congratulations to anyone that did well. And if you didn't, hey, that's all right. We're always learning. Yeah. All right. See you guys. Bye.